Welcome back, students who are taking financial accounting, and we are continuing on with the Chapter 4 short exercises in this series of videos. And as always, if you don't understand the application, watching the video will help you with the application. And you can pause, rewind, and watch the video again. But if if you still don't understand something as far after you've looked at the application, then that means you're missing something in the theory, and that means go back and watch some of the theory videos and not necessarily just chapter 4, because accounting is cumulative. What you may be missing is in something from chapters 1, 2, 3, let alone just chapter 4. So go back and watch those videos, and if you still don't get it, then telephone or email an instructor and we'll help you out. Okay, so 4-6, it says here, journalize inventory purchases and freight charges. Okay, so journalize the following transactions for Jam and Joe's. All right, so A says purchased $4,200 of merchandise on account. Terms are $315, net $30, FOB shipping. Right. So when I have a transaction, the first, and I have to journalize it, the first question I ask myself is, am I affecting cash? And the answer, is no. So then the second question I ask is, am I affecting accounts receivable or accounts payable? And the answer to that is yes, because I'm buying the merchandise on account. So I'm affecting accounts payable, and we know that accounts payable is a liability, and the normal balance of a liability is a credit. So I'm going to credit my accounts payable for $4,200, and I'm going to put it to, what am I buying? I'm buying merchandise, so I'm going to put it to inventory for $4,200. Okay, just realize that the solution is giving inventory. Okay, you have to look at your chart of accounts. Sometimes the general ledger account will be just inventory, but oftentimes it'll be merchandise inventory. Right? You have to look at the chart of accounts in order to determine what account that you're actually going to be using. Right? Now, since this is purchasing the inventory, all of this extra information about terms and FOB shipping have nothing to do with that particular journal entry. Right? But now it says paid $140 to the freight company for delivery of the merchandise purchased. Okay, so I'm asking myself the question, am I affecting cash? And the answer to that is yes, because I'm paying $140 in cash. So cash is an asset, and I increase, let me erase this here. Cash is an asset, and I increase my assets on the debit side. Well, if I'm paying cash, that means I'm decreasing my cash, so I would end up crediting cash, the 140, and so since debits have to equal credits, I have to debit something else. Well, what am I debiting? I'm paying 140 to the freight company for the delivery of the merchandise purchased. Now, here's the rub. Some people will go and they will try to say, well, that's an expense. They might see, they might have an expense account called, shipping expense, right? The reason why, and this goes back to how to make a journal entry, the reason why in my thought process, I think through, okay, I credit my cash, so I have to debit something else. Well, what am I going to debit? Am I going to, debit an asset, a liability, equity, revenue, or an expense account? The reason why I look at the categories of accounts instead of just searching around for a general ledger account is because, yeah, I could find, if I just look real quick and it catches my attention that I have a shipping expense, and I say, okay, that's it, I'll put it there. that's not correct. All right. And you just made a mistake. You have to think through the transaction. What's the purpose of the transaction? I'm paying freight for the merchandise purchased. Well, if the merchandise purchased is inventory, which is an asset, the freight is associated with that purchase. Okay, so even though I'm paying it to the freight company, that increases the value of that merchandise. All right, so I'm going to end up debiting the merchandise inventory account for the 140. I mean, it's not an expense. Expenses are used for the normal operation of the business. Okay, buying inventory is, that inventory is an asset. Okay, it's not a normal expense to the business. So anything that is involved in the purchase of an asset gets put to that asset account. In this case here, it's inventory. Just as a quick example, let's say you buy a used van, okay? And so the van is an asset, so you create, you make the van. You have a van as a vehicle account, right? And you're going to put vehicle. Come on. You have a vehicle account or an automotive account, and that's your general ledger account for an asset. So you're going to put the van in the vehicle account. Now let's say you pay $8,000 for the van, and remember it's used. Okay, but the van, you need to take it to the shop, and they have to replace the transmission, and let's say that costs $3,000. And let's say you're going to have it tuned up, and it needs two new tires and things like this, and it costs another $800 for that. You need a new battery and windshield wipers, so that'll cost like $800, and have it all inspected, right? So when it comes out of the shop, you've paid $3,800 to the shop. Okay, well, that $38 is still a cost of the van, right? So now you have the $8,000 that you purchased it for, plus the $3,800 that you put into it in order to get it ready for the road, right? So now you're up to $11,300. That's what goes in the van, the vehicle account. Now, this $3,800, even though it's like maintenance or whatever have you, and you'll have maybe an automotive expense account. Okay, this $3,800 or a repairs expense or what, automotive repairs or whatever have you, that's not that is not the normal operation of the business. That's associated with getting the van ready for the road. That's associated with the asset. Now, as soon as you put that van on the road, okay, and let's say a week later, the alternator breaks and you have to take it back to the shop, and it costs $500 more to replace the alternator. Okay, well now that becomes an automotive expense account because you're using that van as a normal part of the business. Okay, so when you're looking at this here transaction here, and even though you're paying freight to the freight company on the merchandise inventory, you can't just look at the expense, look at your general ledger accounts and pick out the expense account. You have to think about what category that you're dealing with, and then choose from that category. And that's why this 140 is goes into the inventory account, because your inventory was $4,200 what you purchased, plus the 140 for the freight. So really you ended up paying $4,340 in order to get the inventory. It has nothing to do with selling it. It's not like you put postage on it, and mailed it, right? That's a shipping expense, all right? So I hope that made sense. All right, so C here, you paid for the inventory purchased in Part A within the discount period. So the discount period is 3 days, 3% of 15 days. So you're paying for it within the discount period. And so what are you paying? Well, you're paying off the accounts payable. So if I have a credit to the accounts payable account, that means I have to debit accounts payable for $4,200. Okay, And now we have to and if I'm paying it, I'm going to credit cash. So now we have to figure out how much I'm paying in cash because I'm taking a discount, right? Now remember, discount is not on the freight, okay? So if I have $4,200 is what I purchased, and I end up taking a 3% discount, well, I multiply that by 97%, right? 100% minus 3%, gives me 97%, and that comes out to $4,074. So that's $4,074, all right, that I'm paying in cash. So I credit 4,074, but notice my debits don't equal credits, right? That's because of the difference, the 3% difference, all right? And the difference between the two, all right, ends up going to a credit to the inventory account for that $126, which is the difference between the two, all right? So now when I look at my inventory account, yeah, I paid 4,200, and I have an accounts payable account where I credited accounts payable for 4,200, right? Then I had an additional, let me get a cash account here. Then I had an additional $140 for my freight, so I paid $140 in freight. And now when I pay off the entire bill, okay, I'm going to debit my accounts payable for 4,200, so that balance is zero, all right? That washes out. And my cash, I paid 4074, okay, 40, come on, pen there, 4074. So that ends up being the 4,200, right, which is what my original inventory was for, all right? And, oops, and I'm also crediting my inventory for the 126, right, which now makes my my inventory 4,200 plus 140 minus 126 gives me 4,214. 4,214, which is correct, okay? Because if I take the 4,074 plus the 140, I get the same amount. Remember, the amount of the inventory after I took the discount ended up being 4,074, but I have to add in the 140 for the freight, so I end up with 4,214, which is what my inventory value should be. And notice that my accounts payable washed itself out, okay? And oops, that should be 4,214, not 4,200. Sorry about that. All right, so when all is said and done, it's as if I paid I bought the inventory for cash. I have a debit for 4,200 in inventory and a credit to cash for 4,214. Okay, so that is exercise 4-6, and we'll pick up with 4-7 in the next video.